Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. If you have questions or topics you wish to discuss, please chat those over, whether on this topic or an unrelated topic, and we'll go through those sequentially. The presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. We're excited today to discuss what the Federal Reserve rate changes mean for your solo 401k loan. So let's dive in. So let's give you a quick overview. So are you a solo entrepreneur looking to tap into your solo 401k for a business or personal need? The Federal Reserve's rate changes dominate the headlines, but what do they mean for your solo 401k loan? Key takeaway is you borrow from yourself. So if you have a plan like ours, you can take a loan from your own solo 401k, literally transfer the money from your 401k account to your personal account and use it for any purpose whatsoever. But the economic environment still shapes your loan cost and opportunity. And that's because of the Federal Reserve rate that is set. So we want to explore, again, what that rate change means for your solo 401k loan. So let's first lay the foundation with solo 401k loan basics. So if you have a solo 401k plan, like the one offered by My Solo 401k Financial that supports solo 401k loans, then you can borrow from your own retirement savings. And it's not going to be considered to be subject to taxes or penalties as long as it's properly documented as a loan and paid back according to the loan terms. So those loan terms are going to provide that you can borrow up to 50% of the balance, not to exceed $50,000. So for example, as long as you have at least $100,000 in value of your solo 401k account or accounts, it could be across, for example, both pre-tax and Roth sub-accounts, you could borrow $50,000. Now it needs to be documented as a loan, and we handle the loan documentation requirements as part of our service for no additional charge and paid back according to the terms. So the repayment terms are going to require that the loan is paid back in either monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. Or it could be a longer term if the proceeds of the loan are used to buy your primary residence. Now, it needs to be paid back again in equal payments of principal and interest. The interest rate is prime plus 1%. Or it could be a CD rate plus 2%. The interest and principal payments are paid back to your account, not a bank. So as you can see, the interest rate on the solo 401k loan is going to be a function of the prime rate. That's where the Federal Reserve rate changes could impact the interest rate on your solo 401k loan. So the federal funds rate is the bank's overnight lending rate, which is a key tool for inflation and growth management. It ultimately has a domino effect because the Fed rate changes will impact the prime rate. As we mentioned, the solo 401k, the default solo 401k interest loan rate is the prime rate plus 1%, which therefore ties Fed policy directly to your solo 401k loan cost. So as the prime rate increases, this will impact any subsequent solo 401k loan interest rates. So if it increases and then you subsequently take a solo 401k loan, the interest rate on that loan is going to be higher because, again, it's the prime rate plus 1%. Now, the pros are that the interest that you pay will go back into your account. It'll go back into your 401k account. So just like you're literally borrowing money from your own 401k account, when you pay back the loan, it goes back into your 401k account. So instead of paying back a loan to a bank, you're paying it back to yourself. And now you're paying more money back because the interest rate goes up as the Federal Reserve increases the interest rate, which effectively increases the prime rate. So a higher interest means higher repayment, but you're also having to fund the higher repayment. So you're taking non-retirement money to pay back the loan to your solo 401k. Now, an important question is, well, what does the impact of a Federal Reserve interest rate change to a previously outstanding solo 401k loan? In other words, does a Fed rate change affect my existing solo 401k loan? The answer is no, because once you take a solo 401k loan, the interest rate is fixed. It's not a variable rate. So the rate is fixed for the loan term. So if let's presume that the prime plus 1 is 8.5%, you have the loan today, then let's say next month, the Federal Reserve changes the interest rate. That's not going to impact your previously outstanding interest rate on your solo 401k loan because it's a fixed rate. So whether the interest rate subsequently goes up or down, your solo 401k loan interest rate is not going to be impacted. We appreciate you joining today's session. If you're finding this to be helpful, please like this video as it helps us to get the word out. Please share it with others that might find it to be helpful, whether on LinkedIn or X or YouTube or Instagram. And again, if you have questions or topics you want to chat over, please don't hesitate to chat those over, as we appreciate the chance to go through questions or topics. In the meantime, we'll invite you to our community. We have the largest community of self-directed and solopreneurs, self-directed investors and solopreneurs that have solo 401k plans. With over 30,000 members, we have a vibrant community. There's lots of forums, active forums. There's videos. There's a library of videos and webinars. It's totally free to join. All are welcome. You don't need to be a client. Just anyone that's interested in the topics. You can join easily at mysolo401k.net/my community. So we definitely invite you to join. Also invite you to subscribe to our channels. Again, whether on YouTube or LinkedIn or Instagram or X, as we go live every day. And we like to bring topics to share, but we also love to field questions. So if you want to join, ask questions, or just hear what we're here to discuss every day, we'd really appreciate that if you subscribe. All right, great. Well, it looks like it takes us to the end of the session for today. But until next time, thank you so much, everyone. Take care.